Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is January 13th, 2013. Lots to talk about, so let's get started. First of all, I'd like to apologize for this video coming out a whole day late. Unfortunately, I have some medical issues and I had to take care of that yesterday morning, so I was unable to actually create a video for you guys yesterday like I normally do. Second of all, as always, thank you very much for supporting me by watching these videos and hitting that like button. It always helps me to continue or in continuing making these videos. And lastly, what you guys might want to do is fast forward this video because what I want to do is answer some questions beforehand before I get into the actual SPY analysis. And do forgive me for being a little bit groggy. It is early in the morning, but I also don't feel very good. But I'll do my best. In any case, I had a kind of a not really a question, but a comment from Favco. I noticed you removed the comment, which is fine. But you did mention, if I can recall from memory, something to the point that there's could it be there's a possibility that I'm a little bit too strict with my trading, and yes, I think about that every time I do miss a trade, but it's happened so often that I miss trades that it doesn't really affect me anymore like it used to. The thing is, I'm just going to give you a brief history about myself, just a high end overview, so it won't take very long. When I first started trading back in the day before the internet was even existed or was well known, or you couldn't even really trade over the internet. That's kind of showing my age. I had a stockbroker. I won't mention his name because I don't want to, make anybody sound bad. But I signed up with a company, and he was my dad's broker's friend, which became my broker. And being at the age I was, which was a really young age, I was working at a gas station for $4.25 an hour. And what I did was, I thought to myself at an early age, I really want to get into investing. I must have been, probably around the age of 18, maybe 17. And, it's something that I really wanted to do. And I was probably 18 because I believe that would probably be the legal age for me to play the market. I kind of forget, but it was a long time ago. In any case, so I signed up with this broker, and I had this nice Kawasaki ZX-7 motorcycle that, was my baby. I loved to ride and everything, but I thought that investing would be better for me because it would be, I could use that for my future in case I needed to one day. In any case, so I sold my motorcycle for, maybe about $3,500 to $4,000, and I used that money to invest in the stock market, thinking that, I could make a return or make some sort of profit. So I signed up with this broker, and the broker, found this company called Triteo, and mind you, this was all before SOX compliance and everything came out. And even with SOX compliancy, it doesn't mean that the company is still telling the truth. There's a lot of holes and loopholes that companies can do to get around the financial statements that they release on a quarterly basis. So you have to just keep that in mind, which is why I don't like playing earnings a lot. Well, one of the reasons. In any case, what happened was Triteo, I think it was at like $9 and 9 7/8 of a dollar or something like that. Back then it wasn't in decimal points, it was in fractions. And I remember every day before I would go to work, I would stop by a grocery store to pick up the Wall Street Journal, not to actually buy it, but just to open it and look at what the price was for this company Triteo, of which I bought $4,000 worth. To make a long story short, after a week or two, the price started going down and down and down. So let me just get a little bit more into detail. It went from $9 to $8, and I thought to myself, wow, I'm losing a lot of money. Let's get out of here, right? So I called my broker, and he's supposed to be the professional now. He's supposed to be the guy that gives me the correct recommendations to make the money that I'm looking to make. And he told me, no, you should not sell it right now, because right now, that's just how it goes. It goes up and down, it'll go higher eventually, so don't worry about it. So of course I trust this guy because I'm an auto mechanic. I'm not a stockbroker. I don't know much about the stock market other than reading up on the company, seeing what they do, invest in it, and then hopefully you get a return. So already at that age, even without knowing anything about technical analysis at all, period, I had already learned how to put stops in place. Meaning, I said if it hit this one price, $8, then I would, sell it and look for something else. Because if not, I won't have any more money. So what happened was I took his recommendation and I held on to it. And then, a couple weeks later, it's down to $7. And I was like, dude. So I called the guy back and I was like, dude. Are you sure I shouldn't sell it right now because it's at $7? And he's like, nope, don't worry about it. It's gonna happen, and that's just how it is. It's gonna go higher. Must have been like 2 to 3 weeks later. It's down to $3, and the guy's just telling me, well, it's already at $3. So if you sell it now, it's really not gonna make a difference. You should just hold on to it anyway. Okay, why not, right? Then it's all the way down to $1, and then he's telling me, you know what? It's so cheap right now. If you sell it, it just wouldn't make sense. It can only go higher from here. Well, believe it or not, the company went bankrupt just like about a month later, and it bankrupt at I think it was 12 cents a share. And of course, there's a lawsuit brought up with this company or against this company for false financial information and stuff like that. And so what happened was, I got some of my money back, but the lawsuit would only allow me to get the money back of which the last price was, which was around 12 cents. So you can imagine, investing in a $9 and something cent stock, and your return is only 12 cents. And that just killed it for me because I just lost everything, making $4.25 an hour. Your hard-earned money, pumping gas all day, working, changing oil and stuff like that. It's not a fun thing to do, to see all that money just disappear. Now, when I started getting into technology or in computers and stuff like that, I realized that you could trade online, and so I started trading online, and I learned and I had my own methodology, and I still had no idea about technical analysis. But without realizing that I had already been doing technical analysis, it's just there was no name to what I was doing because I didn't even know there was such a thing as technical analysis. I was already reading charts and monitoring stuff and looking at stuff, and I was doing really well. I think I bought stocks like Proxim and things like that when I was working as a network engineer, and I noticed patterns and stuff like that. I just didn't have any names to connect it to because I didn't really know, that wasn't my daily job or anything like that. And I was making pretty good money until one day my friend says, "Oh, you should buy this one cable company that lays cables to connect internet together." I forget what company was. Anyways, that was the first time I learned never to take somebody else's recommendations, which is why I always tell you guys on these videos, when the videos I give you, it's not a recommendation, it's just an opinion that I have, that, and I'm just letting you guys know what I'm going to do, because you should not follow what I do. You should just use that maybe as an indicator as to verification of what you already are planning on doing, because the worst thing you can do is listen to a guy who says, "Oh, you should buy this stock. It's gonna go up, blah blah blah," and he doesn't know why. He just heard it from his friend, and his friend from heard it from his friend, and whatnot. So I got excited. I was like, "Okay, sounds good. I'll dump all my money into that one stock because I know if it just goes up 10 cents, I'm making a lot of money." Well, believe it or not, as soon as my order got filled into this one stock, I forget the name. As soon as I did that, the stock, for whatever reason, just tanked. I mean, you're talking $1 in like in an hour. It just started tanking, and I just froze. I was like, "What's going on?" Right? And then my second lesson, hard lesson to learn, is you never hold on to a stock, and you have your stops in place. And with all these lessons I learned throughout my trading career, having stops in place, putting break-even stops, trailing your stops and all this kind of stuff. It's taught me throughout these years, all these lessons. Don't listen to somebody else's advice, this and that, whatever. Always verify the trades that you choose to make, even if you heard it from somebody else, blah, blah, blah. It's continuous though. Just because I learned it that one time, I had to learn it over and over and over and over. I continued to listen to other people's advice, and I continued to lose money doing that until eventually it got stuck in my head as to, if someone tells you to buy something, you need to do the research on your own to validate that that is a choice that you want to make. Because obviously, if he gives you his opinion and you listen to it and you lose the money, it's no sweat off his back. You know what I mean? It's your money, so you have to value it and you have to do your own research and make sure that you make the right decision or the decision that you choose to make, not based on somebody else. Maybe if somebody else says, "Oh, this company is doing this," I don't care. I use pure technical analysis. That way, all my emotions stay to the side and I don't have to worry about it, which is why I try not to turn on the news. Because the news will psychologically sway you into thinking something else, and that's why a lot of people got killed in the Apple trade when they said Apple is going to go up $1,000. As soon as it hit 600 or 700, it started tanking. You know what I mean? Anyways, to make a long story short, after these years of trading, and it wasn't, a 24/7 job like which is kind of like how it is now. I wasn't as into it as I was before, like I am now. I developed this methodology, and every time I veer off of my rules, I have a set of rules. Every time I veer off of it just by a little bit, I reduce the odds of the stock going in the direction of what I think it's going to go. Now, I'm not saying just because all my rules and it falls in place with all my rules that it's going to go into the direction that's guaranteed. Obviously, in the stock market, nothing is guaranteed. So you have to have your protections in place. You have your stops, your break evens, and all that stuff. And if I veer off of my rules, I'm gonna look at it as, I went to Vegas. I wanna roll the dice. I wanna play it. And if I lose, that's fine. But I have a certain amount of money that I plan to lose, and that's it. Just like you go to Vegas, you bring say $500 to $1,000, just for example, and you say that's all I'm gonna play, and if I lose that money, then I'm done. And that's how I think of it when I veer off of my rule set. Now my methodology is very strict, but it keeps me safe, and that's the only reason why I do it. Because every time, again, um, I say, 4 out of 5 fits into my methodology. I'll take the trade, but that fifth part is maybe a 10% less chance of it going into the direction I want it to go. And even though a 90% chance that it will go into the direction I want to go, 10% is a huge, huge difference. So if out of 5 things in my methodology, if I have 5, if I only have 4, then maybe that's only 80%, and now I have a 20% chance of it going in the wrong direction. So I hope I made that a little bit more understanding. Uh, it's I don't take offense at it at all, because to be honest, I think the same way. Every time I miss a trade, I'm like, oh man, I should have took the trade. But that's how I used to think. Nowadays, I really don't think that. I mean, again, it's just one of those things where it takes discipline. If it doesn't fit in my methodology, then I wait for the next move. And there's tons of stocks out there that I don't necessarily have to trade the stock market or the SPY. I can just trade individual stocks. And the way I trade individual stocks is I line it up with the market. So let me give you an example. If the SPY made a big move like this over here, and you had this big engulfing pattern, I look for stocks that are at support. Not that already moved higher, just created some sort of support, some kind of doji candle with high volume and whatnot. And if we get another update in the market, it'll push that stock higher. But had I jumped in here, it would be chasing. And the reason why I say chasing here, after this is definitely an engulfing candle and it's following my rule sets, but there are exceptions to the rule. For example, so this is an engulfing pattern. It was on high volume over here, right? And it was on high volume at least for the past 3 days, which is great. So everything fell into my rule set. It was also into support. Well, this line here should not really be there, because it would not have been created until this pivot was created. But it was almost into support. Okay, so had it at least touched the 200 moving average, then maybe I would have. And on the 10-minute chart, there was a reversal candle or pattern. Then I would have taken the trade to the long side, but I missed it, right? But because I missed it, you have to think now. This move already started going up. As long as this thing is going up, and as much as it did, it went right into the 20 moving average and got an intraday bounce or pullback. It would be chasing for me to jump on there again. Now, had I chased, I would have had a big $3 profit margin there. But most of the time, when you have a big move up or down, you're gonna either consolidate or you're gonna pull back. This was one of those rare cases that you have a big move up and then you had a higher another pop higher. Okay, so based on how often this happens versus how often it pulls back versus consolidate, it consolidates and pulls back a lot more often than it'll continue higher, even in a engulfing pattern. The engulfing pattern, let's just say this candle here was maybe just this long, or maybe even a little shorter there because that's kind of long. Maybe the pop was only this high, then I may have considered it. But because it was so high, I just didn't see how it could sustain it. It obviously did, but I just couldn't see how it could at the time. So again, I'm an honest trader when it comes to these videos for you guys, because I don't want to say, oh yeah, I made this trade and it's the greatest thing in the world. I'm just going to be honest with you, and I missed a trade, and I just, that's that. I do make other trades, like for example, Best Buy BBY. I took this trade right around here, and I had this nice pop. This was a higher risk trade, a very high risk trade, but I took it, and I took it around this time here. So I held on to it, and then it popped up higher, and then I got rid of it. I actually actually didn't get rid of it at the $2 mark. I actually got rid of it at like the $1.80 mark. So I made quite a bit of money off of this, but the reason why I don't mention these on videos is because these are higher risk plays. These are like 75% chance of it going in the right direction plays, and to be honest, I didn't think it was gonna pop this much, that high, that fast, and but because it did, I took my took my money off the table, and I'm sitting pretty in profit. But I don't release these to you guys, because in case you guys take the trade and because it's a higher risk trade, I wouldn't want you guys to lose money based on a immature type of jumping kind of thing. So I do veer off of my, again, I do veer off of my methodology, but I make sure that I tell myself, okay, this is like Vegas. This is how much money I'm planning to lose, and that's it. And if it goes in my direction, great. If not, then you lose, and it's still cheaper than going to Vegas because I don't have to pay for air flight and room. Anyways, to make a long story short, that's pretty much my life story in 17 minutes. So, moving on to the um, regular analysis here. Alright, I'm going to make this as fast as possible because nothing really changed from last week. Okay, so let's see. This candle here was Monday's candle. We already talked about this candle being right on the 145.07 level, and it gapped up. Everybody who knows or has been watching these videos for a long extended time, you know that these mathematical calculations work and work well, but they either going to be an intraday pullback or bounce, multi-day pullback or bounce, or gap. And if you gap up into it and over it, then you can pretty much determine that it's probably going to continue higher. She went up, she came back down, right back into the 145.07 level once again, and then started pushing higher. The cool thing is we also had this 147.05. I'm sorry, I was talking about the 145.07. The 147.05 level all the way up here. On Thursday we closed at, I believe, 147.08, which is about 3 cents off. And then on Friday we closed at 147.07, which is only 2 cents off. We did create a doji candle here, but again, this is not a reversal candle in my opinion. Yes, we had about 2 days before creating the doji candle, and we could potentially come back down, but again, we didn't get that kind of volume that we're looking for. I mean, yes, this volume on Thursday is higher than everybody else, and or at least past the past 3 days, but I don't like hanging man candles as much as I like shooting stars. Okay, so just keep that in mind. Hanging man candles are single candle reversal patterns on higher volume, but I just don't see this as being strong enough. Okay, again, this is my methodology, again holding me back from jumping in, and it's kept me safe in a lot of other situations as well, that I won't get into because the clock is ticking here. So we have this doji candle over here, and it didn't happen as on volume or as on higher volume. So I think, to be honest, we're just stalling out here. There is a potential that we could pull back. All right, pulling back maybe into the 144.30 level, but I don't know. There is a possibility that still, I have a mathematical calculation here that I created on the 3rd of January, which is at 149.51, right? 149.51 is going to be higher than the high here, which is around 148.13. Just to get an exact price, the high of this candle was 148.11. Okay. Now I'm gonna have a question for you guys, and this is a question on your intelligence. Nah, not really. Just what do you guys think? Do you guys honest? Well, this is what you guys don't have to answer me or anything like that, but you have to ask yourself, okay? With all the institutional game playing and all the manipulation in the market, and we are aware of it, okay? And we can't complain about it like most people out there. They complain about Wall Street, manipulation and all that kind of stuff. To me, they complain, but ever since the stock market opened from I don't know how many years ago, there was manipulation already there. So there's nothing new. It's just a lot more media mainstream now that everybody thinks that it's corrupt, but it's always been corrupt. And as traders, we need to realize or understand that it's always going to be that way. And because we are trading the stock market, we need to be aware of it and embrace it, right? So if you think about it, okay, we had this up move here. Let me just delete everything here so it's easier to see, okay? So we came up, obviously, and then we came down. And then what happened? We came up and we were higher than this high here, okay? And then the low is still higher than the previous low. Okay, so what does that mean? This means that we are in a confirmed uptrend, right? If you consider this a pivot, I don't really consider it a pivot because we needed one more candle lower than this red candle here for it to be a pivot. But let's just say you did call it a pivot. Guess what? You got a high, you got a higher high, you got a low, you got a higher low. On the daily, what you have is a trend change, right? We have from a high here, a lower high, and lower high, and a low, a lower low, and lower low, and so on and so forth. That was a confirmed downtrend on the daily. Now, because we're in a confirmed uptrend, we obviously want to trade with the trend. Now, let me delete all these drawings again and look at this in a different perspective. We have this up move here, and this could be considered a consolidation pattern. It consolidates for a few days, and now we're popping higher. But you notice it's kind of weak now. The candles aren't big like all of these medium-sized candles here. They're pretty doji-like, spinning top-like candles, and the volume has just kind of depleted. Okay, so that's something to keep in mind, that there is a possibility that we could at least get to this double top over here and potentially have a slight pullback, or with the manipulation in the market, create new higher highs. So 52-week highs, right? If the institutions can get the markets to believe that we can make new 52-week highs, then that's obviously something that we need to be aware of. So let me just reload the drawings here. So now with that knowledge, now because we're now into this 147.05, let's just say, I could literally take a short right now because it's already in this mathematical calculation. But let's just say this was a consolidation pattern. We could push higher into the 149.51. That is a possibility. And again, these mathematical calculations does not mean it's going to get there. It means if it does get there, it's something to consider as taking a short trade or a long trade. Depends on which direction it's going. So I have this alert here at 149.29 to alert me if it gets close to the 149.51. Okay, I may actually consider, depending on the pattern, again, if I get some kind of shooting star or a doji candle on higher volume than at least the past 3 days, and it's not a substantial move, then I may actually take a trade at this double top here, and my stop would be any close above this 149.51 level, which means I don't lose much even if it gets that high. So this price would be about 148.11, so I would lose $1.50 on the trade if it continued higher, and that's obviously a possibility with all the manipulation that we have. Okay, so let's just keep that in mind. In my opinion, that is something that I am watching for and or waiting for. Now, let's just say we do get a pullback here. Not a big deal. I'll do a recalculation to see where support's going to go. But the probability of support is going to end up somewhere around this area here. We may get some support around the 20 moving average, and then we have the 50 moving average that may actually line up with this bottom trend line here, in which case we'll give it support and I'll take the next trade higher. Why? Simple, because if you hit support here, that means we still are in the uptrend, and you wanna trade with the trend, right? So if it's in an uptrend, then it would make sense for me to take a trade here. And even if something happens in the market, the trend will be on my side. So even if it does go against me, it won't be as bad. Now, if I took the trade, or if I took the short here at the 149.51 level, that would be obviously a counter trend trade. But I'll trade it either direction. You can make money going up you can make money going down. It doesn't matter which direction it goes. And when I play the stocks, when I find stocks that are in good support or good resistance levels and it lines up with the market, it makes sense to take those trades on those specific stocks, because the reason for that is if the stock itself goes against you, meaning it goes in the direction you don't want it to go, but the market does go in the direction that you want it to go, it'll put pressure on that stock and you won't lose as much. You see how that works? If you need a better explanation on that, I'll definitely be happy to explain that in the next video. It's not a problem. In any case, so again, and if you've watched my previous videos, any type of up move like this, let me just delete everything again here. Okay, we have this up move, we have this, kind of like this rising channel over here, and rising channels don't break higher, they break lower. Okay, this could be considered a wedge pattern depending on how you want to look at it. It's a very messy wedge pattern, but it's definitely a wedge pattern nonetheless. We had a wedge pattern kind of like over here where you can connect the gap to the pivot points here. As you can see, it's a rising and then you have a breakdown, and now we're just retesting the support line, which is right here. Let me just make this a little longer. We're just retesting this line over here, right? You could look at it in many different ways. Drawing trend lines is an art, but the bottom line is when you have a rising wedge or a rising pattern, you look for the breakdown, not the break higher. But when you do have a break higher, a lot of times, obviously nothing's 100%, but a lot of times if you break above this top line here, it's just like this one here, it won't last long. So it makes sense to me that if we get into this 149.51 level and we break above this top line here, that the market should be pulling back. And when it does pull back, it's going to pull back pretty good, where it's going to at least, potentially come back down to this gap fill level over here, but still holding this uptrend. Okay. Now let's switch to the weekly chart. I know I discussed the weekly chart in the last video. Again, we are and have always been in an uptrend. Nothing has changed from that. Okay, so keep that in mind. And we could potentially go all the way up here, which is around the I don't know. It really depends on how fast it gets there. But you see this upper trend line here on the weekly chart, which is a little bit longer term. There's definitely a possibility that we could get there before having a pullback. Right, we had this engulfing candle here. It wasn't this engulfing candle. It wasn't on higher volume, so I couldn't take the trade based on a longer term, with a longer term thought process of it being a weekly chart. But it was still there, and it should still be respected, right? So we had a little bit of a push higher. So it would not be out of question, or whatever I'm talking about. It would not be unheard of for it to actually get up to the 149.51 level. I mean, if you look at the weekly will say, yeah, 149.51 is not a big deal. Okay, and it still would be a higher high from here. From this high candle here would still be a higher high, validating the uptrend. Okay, so just keep that in mind, that I'm still waiting for another push higher, and it doesn't mean that it's going to get there, it's going to get higher. It's just that if it does, then I'll probably be taking a trade and doing that kind of thing. So as far as stocks go, I'm still playing stocks, but normally the reason why I do the analysis on the SPY is simply because 90% of the stocks will follow the market. The SPY is the ETF that tracks the S&P 500. The S&P 500, unlike the Dow Jones, which only tracks 30 stocks, 30 of the stronger market stocks, the SPY tracks 500. So you get a little bit more accuracy when it comes to doing analysis on the markets when you do it on the SPY instead of the Dow Jones, right? It makes sense. But you notice the news would say Dow Jones went up 100 points. That'll get the non-educated market players out there thinking that the markets are stronger, which in fact it isn't an uptrend. But we all know that this is manipulative, meaning the government is just trashing the dollar to make the markets go higher. All right, switching over to the Apple daily stock for Favco. To be honest, if you look here, this little blue square, that's telling me that earnings is on the 23rd of this month, which is next week Wednesday. Okay, not this coming Wednesday, the Wednesday following that. I don't play earnings, and when any stock such as Apple, any big stock like Apple gets closer to earnings, you have a lot of volatility in stock, which means there's likely chance that this guy could go either way, up or down, in a pretty substantial bigger type move. Okay, so just keep in mind that I will probably not be considering this trade anymore at the 476.39, but it would definitely be interesting to see if we still get support there. Okay, just to update you on Apple. All right, so looking at Facebook, Facebook is something, I love Facebook because I actually called this low over here. Was it that low? I think it was that low, and there was like two lows that I called. If you looked at my past videos, I forget which ones it was, and it was amazing to see the calculation actually work with only so little data. But that was pretty cool. Anyways, ever since then, I never actually traded Facebook. One thing about Facebook, okay, something to keep in mind. We don't have a 200-day moving average, obviously, because we don't have that kind of data yet. However, Facebook right now, what I can see is that it's definitely pretty extended in my opinion. Okay, so there's a lot of it's very overbought, and the kind of pullback that you're gonna get is like an overbought pullback where it's not gonna be as much. It's gonna have a small pullback, but maybe not as much. So basically the next resistance point that I'm gonna see is around this area here, just to be safe. You could there could be a possibility around these areas here, but just keep in mind that Facebook also has earnings here coming out on the 30th of this month, and you guys all know I don't play earnings, and I just learned the hard way. I thought I could call earnings 90% of the time, and I just couldn't. For me, it was just like 70%, 70%. And technical analysis obviously does not work, in my opinion, because I have not found the secret to it yet. But it doesn't work for when it comes to earnings or big news, because it's just an emotional disconnect from the norm, meaning there's huge emotional impact to this specific stock whenever there's earnings or big news. But if you wanted to, I would definitely not take the trade here, and the reason is simply this again. You're in a confirmed uptrend. You have a low, a higher low, and a high and a higher high, right? In addition to that, you are above the two moving averages here, showing that this stock is in strength. And it's kind of like, you have to think of it this way: if the stock is strong, you don't want to short a strong stock, and the reason is, it could push higher, and if you wanna go long on a strong stock and go short on a weak stock, right? It kind of makes sense because it'll be in your favor that, say you go long on this stock here, and the stock is strong, and the stock starts pulling back. You still have that strength behind you, that it may not pull back as much as it would have before. As much as it would have, as if it was a weak stock. If it was a weak stock and you shorted it, right, it would make sense that it would pull back a lot faster and a lot harder, right? And if you went long on a strong stock, then the same theory goes, where if it goes up, if it does go up, it's gonna go higher faster, right? Makes sense. But these are the two resistance points that I would be looking at. But for me personally, I probably wouldn't actually take that trade, and I think these are very old drawings here. All right, doing a quick analysis for somebody else who I believe asked to do analysis on Arna. Arna is just something. I didn't want to do a mathematical calculation on Arna, simply because Arna is not train. It's a very sporadic. There's no pattern. There's nothing really going good for Arna. You could say that Arna is on the stronger side because it's above the three moving averages over here. And if you look at this in a longer time period, you could potentially see this as an up move and then a down move, right? So then now you have a pivot here, so you're going to definitely have pretty good resistance up there if it gets there. Okay, but something else to keep in mind is that after it went up, it came down, and what is it doing now? It's consolidating, right? So this could potentially break lower, but it's contradicting, because even though it's having this bearish pattern, it's still above all three moving averages. So it's kind of contradicting itself. It's kind of like it's fighting each other. But Arna is one of those stocks that had a huge blast off. From an early age. I forget what the reason was, but I think they released something or whatever, got FDA approval or something like that. I don't remember. But if you look at stocks like this, where you have a very nice pivot point over here, you would expect this to be pretty good resistance, right? But what happened was this guy just blasted right through it. Like, this resistance thing, this resistance ceiling wasn't even there. Okay, so you have to keep in mind that when you have resistance and support, the more resistance and support you get, the better off you are, because it gives you that much more. Like for example, I don't know, just throwing it out there. If your roof of your house was made of wood and it was, like maybe 5 feet high, and you jumped and you hit your head on the roof, I mean, chances are you could actually break that drywall, right? I mean, if your ceiling was drywall, you could probably break through it, right? Let's just say I had, you know, 10 pieces of drywall connected to each other, and it's going to be a lot harder to get through, right? So you know that's how you have to kind of think of it in trading, where you have support, where you have a lot of support underneath you. Then it gives you more of a chance that you won't break through, and that goes the same for resistance as well. But Arna is just not something that I would trade myself, because it doesn't, it kind of looks messy to me. But again, it doesn't matter what I think. It's if it fits in your methodology, then everybody has their own, and is successful at what they do. um, this is just my thinking for Arna. All right, so this is Amazon here. I used to trade Amazon a lot before. I just don't hardly trade it nowadays. But looking at Amazon, we have this bottom trend line over here. Okay, so that's going to give some resistance, and we also have this upper trend line here, which I'll get to when I switch to the weekly chart. I do have a mathematically calculated level here at 273.64, and I don't have one any higher than that. Okay, so it doesn't mean that this is, the line in the sand where it can't get any higher than this. The reason is, if this guy just went straight into this 273.64, then I may have considered taking a short on that. That wouldn't bother me at all. But if you kind of take a look here, let me just zoom in. That looks kind of ugly here. We went up, and now we're consolidating right under this level, which means it's building power to potentially go higher. Okay, so let me just again, it's the ceiling thing. So that's one resistance point is the 273.64 level. The second resistance point for Amazon is this. We have this trend line over here connecting this pivot to this pivot, and now we are already into the third pivot. So there is a potential they could push it higher just a little bit to the 273.64 before having a small pullback. This 20 moving average would be minor in my opinion, and we would wait probably for the 50, which is probably going to be more substantial. But that was a weekly chart, which was obviously a little bit more long term. For the short term, which is what we are, short term traders, the 273.64 based on a reversal pattern, doji candle, shooting star, on higher volume, higher than the past 3 days. I may consider taking a short depending on what day it does that, simply because earnings is on the 31st, so you have to watch out, and Amazon is one of those big movers during earnings. All right, so this is a chart of Monsanto. MON is a symbol. This is another chart that's in an overbought territory, but just keep in mind, look at this. I mean, you got all three moving averages all lying nicely below each other. We got this huge gap in between these moving averages, which is showing that the trend is pretty strong. If you look at the daily chart, it's sure enough, I mean, this guy's just been climbing higher and higher and higher. Would I go long this stock? No, I wouldn't, simply because for me, it would be chasing if I did that, and I don't even have to do really a mathematical calculation to see that this thing is way, it needs a pullback sometime eventually. Let's see if I can get something in the weekly here. All right, this is switching to the weekly chart. I mean, you have a kind of a area over here that you might have some resistance. Let's see, nothing really over here. You already had resistance over here. All over here doesn't look like much. I mean, to be honest, it just looks like, yeah. I think your major resistance point would be right around here, which is about the 120.22 level, right? Which is, it's got a long ways more to go, but that doesn't mean it's going to get there, and nothing just goes straight up, right? But if it can get to this upper part over here, in fact, I'm going to put an alert over here. That looks pretty like a pretty good shorting area. I mean, it's way up there, but if it does get there, then that's something that I want to consider depending on what the pattern looks like. But as of now, I wouldn't go long for me because it'd be chasing, and I wouldn't short it right now just because it's overbought, because the stock is so strong. Okay, that's the reason. I mean, it could definitely pull back already as soon as next week, but again, it's one of those things where it's just, it's just a little bit too strong for me to even chance it. And it looks like it already had earnings a few days ago on the 8th of this month, which was last week Tuesday. Um, so I'm just gonna have to guess that the earnings are good because, well, actually, yeah. So it looks like the earnings are good. So we had a little gap up over there, and it's just floating higher. You got to remember too now the volume has been pretty low in the market. So with low volume, you got to give an upside bias. So if the markets are holding up right now, it could be holding up because of the low volume. And all we need on the SPY again is one more push higher. One more push. I mean, to be honest, if you can get into the 149 flat, maybe I should move this down to the 149. If you can get to 149, I may already consider taking the trade because I don't want to miss this pullback. Because a pullback, I think, might be pretty good. I'm gonna wait though for it to go higher than this high over here, which is a 52-week high, I believe, and take it from there. Check the pattern, make sure I get the volume that I'm looking for. I don't really want to wait for a reversal candle to be created. What I'm going to do is just maybe take the trade and then have a tight stop and see what kind of candle it creates. But I don't even know if it's going to get there next week. That's a $2 jump. It's possible we jump to $3 in a day, but we'll just take it from there. So I'm already into the 40-minute mark. But for those of you who have stayed for 40 minutes, I have a little bit of a treat. Now remember, this is something that you have to keep in mind. My methodology is very strict. If nothing else, it needs to stay that way. Okay. On Friday, I made a mathematical calculation. 114. This is a chart of Baidu daily chart. 114.25, and another mathematical calculation at 116.66. Okay. 116.66 for shorting levels. Now, multiple what is that called, ceilings or resistance. Okay, multiple. So we have this trend line going down here. We also have all this consolidation over here. The longer the consolidation, the little bit more strength it holds. Okay, so we have that consolidation over there all around the 200 move, and we also have the 200 moving average over here all around the 200 moving average. Okay, so we got that intraday pullback. The high of this candle was 114.43. Okay, so I was a little bit off in this calculation. Not a big deal. It's not my calculation that's giving the problem. It's just that's life. Anyways, we may already start pulling back on Baidu, so which is fine. And Baidu, obviously, you might say, well, you just said that if it was above the moving averages, that it's a stock in strength. And yes, I do still believe that, but it's still under the 200 moving average, and it's in a downtrend. Okay, high, low, lower low. See, you have a low here and a lower low. This is a confirmed daily chart downtrend. I don't see any earnings coming up anytime soon, so that looks good as well. And I'm gonna short, right? So if I short in a downtrend, that means the trend is my friend. It's in my favor. So even if it spikes higher, it won't be hopefully as bad. Okay, so this is a treat for you guys to watch the 11666 level. Okay, which is the 200 moving average. I may take it sooner than that. It really depends. All I need is one more pop in Baidu, and I may actually consider taking the trade. It really depends. Again, it's one of those things where the volume has to be there. Okay, not only the volume, the type of candle. In this situation, though, because I have so many resistance points, I may waive the candle type. As it being a reversal, but it really depends. Again, if I veer off of my methodology, if I miss a trade, I miss a trade, not a big deal. Now here's the thing, Baidu is coming up into resistance, right? Again, lining it up with the market. This is exactly what I was talking about earlier. So Baidu is in resistance. This is a chart of the SPY, which is also about to go into resistance. You see that? Let's just say the SPY gets into this 149 level at the same time as Baidu gets into its level, then even more so I would take the short trade on Baidu. And even if the market even if I took the Baidu trade today, the market is still very close to allow a whole bunch of resistance levels. Let me just zoom out over here. Yeah, I don't even see that much more over here. Let me switch to the weekly. Alright, so this is the weekly chart. Let me just delete all the drawings here so it's just a little bit easier to see. And we have resistance here, which the markets were like, yeah, I don't really care about you. Actually, we got that resistance over here already with this bounce over with this pullback over here. Let me just zoom over here, and then we're gonna have a pivot point right here. Okay, so we probably already got that. We're gonna have another pivot point right here. So we have all these resistance levels, all very, very, very close to each other. Okay, which tells me that even if it does go higher, it may not go that much higher. In fact, now that I look at it, let's see if we can connect the dots over here. Yeah, look at that. That's pretty cool. I'm just doing this on the fly here. I could actually connect these two together like this. Or maybe I can go from this gap. Just cut through those. That doesn't look too good to me. Anyways, so we have this support line over here. We break down this support line. We break down from here. And I think this market is done. The question is, when is it going to do that, and if it does do it. Anyways, that's what I'm talking about when I'm talking about lining up the stock with the market and having multiple instances of resistance and or support, and it should protect you a little bit more, but obviously nothing's 100% guaranteed, and you guys need to do your own research to validate my research, that sort of thing. So the only person responsible for you winning or losing money is yourself. Alright, switching back to the Baidu chart, I'm just going to do a quick Fibonacci retracement from this pivot down to this pivot down here. And yeah, we even got a 618 Fibonacci retracement right at the 200 moving average. So I think that's going to be pretty good resistance if it even gets there, but we'll just see, and that'll be for a short. And again, that's up to you, totally 100% up to you guys. It's not a recommendation or anything like that. So good luck to you if you decide to take that. So I wanted to do some stuff on metals. Just going to do a quick one on silver because we are so going into an hour pretty soon. I still have this level here at 2773. It hasn't gotten there yet. If you just look, it's pretty obvious that we're just we're basing right now. We're consolidating. We have this kind of like just going sideways kind of pattern here. This $30.11 level has held up. This 28.75 has held up. These mathematical calculations has proven to hold up time and time again. Lucky, yes, definitely. Definitely not going to take these things for granted, but they could fail, and they have failed from time to time. So just keep in mind that this calculation 2773 is actually a mathematical calculation, and it helps to see that we actually got this this determination of where the potential of how far this SLV could drop from this measurement here. And I know I explained to you guys how to do the measurements from triangles and stuff like that, and if I haven't told you guys, when there's another triangle in another video, then I'll definitely tell you guys about that. But we're already into 47 minutes, so again, I just want to say thank you very much for watching these videos. Thank you very much for hitting the like button. Hopefully next week is a better week, and I've already made tons of money last week on trades using the methodology that I had. I just didn't do the trades on SPY, but I really don't want to talk about those stocks because I don't want to sound like one of those guys that said, oh yeah, I traded this and I made this much money after the fact, you know what I mean? So whatever I have in these videos is pretty much what I want to talk to, and I don't want to get into that bragging thing ever again. In any case, I hope I answered everybody's questions. If I didn't, feel free to repost, and I'll definitely try to get into next week's video as soon as I can. Hopefully I feel a lot better next week, but we'll see. In any case, thank you very much again. God bless to you all. Good luck to your trading next week, and I hope to see you in the next video.